Welcome back to Day 7 of our Crypto Trader Explainer. Now, if you've been following along with us, you already know that looking at a raw crypto chart can honestly feel a bit like staring straight into the matrix, right? Just numbers and lines everywhere. But today is the day we turn all that absolute chaos into structured, readable order. So let's just dive right in by asking a pretty fundamental question. How in the world do we actually make sense of market chaos? Like, how do we navigate the wild, totally unpredictable movements of crypto and become actual market detectives rather than just gamblers? Well, spoiler alert, the answer isn't a crystal ball. It's actually hidden right there in the geometry of the charts. See, when you look at raw price action, it seems completely chaotic. But underneath all that noise, there are footprints, literal clues left behind by the psychology of buyers and sellers, and our job today is to track them down.
To do exactly that, we're going to focus our investigation on our foundational tools for Day 7, which are trend lines and channels. Think of the market as this constant, relentless tug of war. Really, it's pretty binary. You're either riding the aggressive momentum of an uptrend, or you're stuck defending your capital against a downtrend. It's as simple as that. And figuring out exactly which regime you're currently operating in, well, that is literally step 1 to surviving out there.
And that brings us to a really clear 3-step progression. Step 1, identifying the raw uptrend or downtrend. Step 2, we take those basic lines and box the market in to create channels. And step 3, we watch like hawks for those boundaries to shatter with trendline breaks.
Now let's talk about channels for a second. If a single trendline is just a floor or a ceiling, you can think of a channel as the entire hallway. By drawing a parallel line across the opposite peaks or valleys, you effectively encapsulate the price action right in. It's really cool because the market actually tends to ping-pong between these boundaries, telling you exactly where you can anticipate those bounces and rejections. Honestly, it brings just this beautiful sense of order to the whole chaotic mess.
But here is the crucial point. You have to watch closely for what I like to call the inciting incident, the trendline breaks. Because look, channels and trend lines are fantastic, but they definitely don't last forever. Eventually, pressure builds up, and those patterns completely shatter. This is the exact moment the market decides to change its narrative. When a price forcefully pushes through a previously established line of support or resistance, it is a massive shift in momentum. As a market detective, this break is your absolute best clue that a brand new trend is being born and a serious trading opportunity is presenting itself.
But, and this is a huge catch, beware the trap, false breakouts. This is absolutely where the market will try to eat you alive. Just when you think a boundary is broken, you get excited, you rush into a trade, and bam, you get hit with a false breakout. The price pokes its head out, baits all the enthusiastic traders, and then snaps aggressively right back into the previous channel. Just brutal. Understanding that these false breakouts are a reality is absolutely vital for protecting your capital. You have to make sure you wait for true confirmation before you jump in.
All right, theory is great and all, but it won't save you in the wild. It is time for your Day 7 practical mission. You need to pull up your charting software and start digging into the past. Look for historical examples. Seriously, historical data is the greatest teacher you will ever have. The crypto markets basically leave a permanent record of human psychology, and finding these specific setups in hindsight is exactly how you prepare to spot them in real time.
So, your assignment for this explainer is actually highly specific. You need to go and find exactly 10 historical examples of these concepts in action. Now, why 10? Well, finding just 1 or 2, that could just be a total fluke. But by forcing yourself to scour the charts to actually draw the lines and identify 10 distinct examples, that is how you build real pattern recognition in your brain. You're transforming these concepts from abstract ideas into recognizable, highly actionable visual cues.
Let's quickly review the complete list of clues you're going to be hunting for on your mission. Here is your Day 7 target checklist. You need to locate clear examples of an uptrend and a clear downtrend. Then, draw perfectly parallel channels that contain the price action. You also need to pinpoint the exact moments of those explosive trendline breaks. And honestly, perhaps the most important one, you have to find those nasty false breakouts where the market totally tried to lay a trap. Go through and check these off one by one.
As you head out to hit the charts for your practical exercise, I want you to ask yourself this final overarching question to keep your guard up against the chaos. Will your next trend line reveal a massive profitable breakout, or is it going to lead you right into a false breakout trap? The difference between those two outcomes, it all comes down to your patience, your analysis, and exactly how well you've mastered the concepts we just covered today. Good luck out there, keep those charts clean, and I will see you